What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be having a bit of a talk about the market as a whole, what is going on, whether you should be selling stocks, holding stocks, buying stocks, my thoughts on the market as a whole. I'm sure you're all aware that yesterday was the worst day we have seen in the market in a very, very long time. The Dow Jones went down nearly 7%, the S&P 500 went down nearly 6%, and the NASDAQ went down just over 5%. And this is coming off the back of the greatest 50-day stock market rally that we have ever seen. And now there's a lot of panic going on because people are starting to see red days again. They don't know what to do. Let me just bring you back to about 2.5 to 3 months ago when all of this started happening. And you remember there was loads of 5% red days back then. I mean, it was like every single week there was a 5% red day. Did you sell all of your stocks? Did everybody go into mass panic? Not really. There are a lot of new investors in the market right now, which I think is also affecting just how volatile things are getting. A lot of people took advantage when the first crash happened. They thought it was fantastic time to buy, put some extra money into the stock market and let it run for years and years. But I also think a lot of people got into it thinking they could leave their money there for years, but then when they start to see it go red, they get afraid and ultimately they will sell off. Basically, I just think there's a lot of what we like to call weak hands in the market all over the place right now. But the question on everybody's lips is, should you be taking profits? Should you be selling everything and waiting on the sidelines? And that's really what we'll speak about today, okay? So right before we get into the information, can I ask you to please smash the video a like? Genuinely helps me out so much. Drop me a comment down below, let me know what you're doing, what your plans are, okay? If you're selling, if you're holding, if you're buying, whatever it is. And please, if you are new around here, subscribe. We are on the road to 10,000 subs, baby. We are flying it. I appreciate you all so much. So with that being said, guys, let's get into the video. So here's one of the first things I want to show everybody, okay? Here's how the stock market tends to trade after brutal sell-offs like Thursdays. And it was brutal, as I said earlier on in the video. The Dow Jones down nearly 7%, the NASDAQ over 5%, the S&P nearly 6%. It was a terrible day. If we do quickly just go and have a look over on the left side of the screen, we can see that pre-stock market futures are all currently up today. On average, the S&P 500 has rallied 2.14% the day after a decline of 5% or more, and has been positive the next day 81.48% of the time. It goes on to say, the longer the time horizon, the greater the likelihood and intensity of the bounce back. About a year after such drops, the S&P 500 has averaged a gain of 18.92% and has had positive returns 82.6% of the time. So the S&P 500 average performance after a 5% decline. The next day, up 2.14%. All other periods generally up 0.03%. We can see as the weeks and the months tend to go on, that number goes up and up. And this is the percent of the time that we have seen the S&P actually up after a 5% drop. So we can see the next day it's generally up. Week, month, 3 months, 6 months, about the 60 to 65% range. It could go either way, and then 82.61% of the time a year later it is back in the green. Ask yourself the question, are you a long-term investor? Because that's exactly what I am. Being a long-term investor means that you are willing to accept a certain amount of risk in pursuit of potentially higher rewards, and that you can afford to be patient for a longer period of time. As Peter Lynch said, time in the market is better than timing the market. So don't panic because we see a red day, When you started investing, you decided that you want to hold on to these companies for years and years. So what does a red day really mean? To me, it's actually a good thing. And I know this sounds weird, okay? Yesterday, my portfolio took a big hit. I lost a considerable amount of money. And I'm not even joking you when I say I was excited. Because I know if I'm to lose 5 or 6% in the short term, ultimately I can buy 5 to 6% cheaper than I could have the day before, and that should turn into a lot more money in the long term. So from a long term point of view, it's actually quite good for us to see some red days. We want to buy these stocks as cheaply as possible. Even if in the short term we lose money, in the long term we should be making money. History is only somewhat of a guide when it comes to trying to predict what could happen going forwards, okay? And I think the best comparison we have right now is the Great Recession. And we can see when the Great Recession happened, we dropped from here all the way down to here, okay? So very sharp drop. Now, nowhere near as sharp of a drop as we saw with what's happening in the world right now. It happened in literally a matter of a couple of months. And then we can see, relative to this time frame, it was quite a nice move to the upside. There was some sharp losses. It keeps moving to the upside. There was some sharp losses. And ultimately, it keeps moving to the upside. What we're looking at was way quicker, okay? Literally, the space of a month, and we lost all that value, over 30%. And then it went up, we see a big dip. It goes up, we see a dip. But we've steadily been going up. Now we're seeing our first big pullback. This has to be expected, wherever you look at the S&P 500, it's never just up. There is absolutely always going to be a red day. Every time there is a red day, you can't just go screaming, oh, I need to sell. It's time to sell. What if I can get in cheaper later on? Again, it's not about timing the market, it's about time in the market. Here's something quite interesting I found a little bit earlier. I know a lot of you guys like drawing your pretty lines on the charts and doing all the analysis that way, okay? So the S&P 500 index, how high in the short term, okay? Here's our previous highs, here's where we're at now, and these are all of the previous bottoms. So essentially, what this says is the next logical steps to reaching all-time highs is first of all to get back to 3393.52, and that was the very peak of the S&P 500. And if that's to happen, and if we can blast through the all-time highs in the same way it sliced through heavy resistance at the 3000 level, which is what just happened very recently, the S&P 500 could very realistically reach as far as the 35 to 3600 range, which is this green line up here, before hitting any resistance lines, whatever. Now, I don't really go on to graphs and draw out things like this, but I did just think it was a very nice illustration of the S&P, and it kind of shows where we're at and what's happened. It's also important to understand why the market moves. It obviously goes down when people are selling their stocks, and it goes up when people are buying their stocks. Why do you think we're seeing certain markets move so much quicker than the S&P or the Dow Jones or whatever it is? Millennials are piling into stock trading to beat the market. The investing app Robinhood saw record deposits in the first quarter of 2020, with daily trades up 300% compared to late 2019. eToro and Raging Bull trading saw demand surge 220% and 158% respectively over the same period. There are a lot of brand new investors getting into the market, and some of them will most certainly be great investors. You know, they will plan on investing forever and ever. I am a very new investor, as I'm sure you're all aware, but I don't plan on selling just because I see a little bit of a red day. Then there's going to be people who got in just because a lot of their friends might have been speaking about it, or somebody at work might have been speaking about how they made money on Delta Airlines or American Airlines. They could have a brief understanding of how the stock market works, and they would have heard that you should buy low and sell high, and then they see a graph that's very low, just click the buy button. There is a lot of new people in the market, and that is why a lot of, in my opinion, the exciting stocks are moving so quickly. Hear me out, right? A new person in the market who wants to make a lot of money very quickly doesn't care about Johnson & Johnson. People look at Johnson & Johnson's 5-year chart and say, why would you invest in them? In 5 years, they've only given back 43%. In a couple of weeks, Hertz gave nearly 900%. Why wouldn't I go invest in them? Oh, I just realised Hertz is up 50% pre-market. Why? Why are you doing this? Bankrupt Hertz wants to sell up to 1 billion in stock. Right, we're not talking about Hertz. I'm closing that. And then the likes of airline stocks. We've seen these guys hammered to the ground over 70% and then make these amazing rallies to the upside of over 100% in a matter of weeks. Simply put, a lot of the new investors are in a lot of the more volatile, more exciting stocks, and that's only making these already volatile in nature stocks more volatile. Is volatile even a real word? Volatile? 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 What? You get the picture. Let's have a quick look at a list of stock market crashes and bear markets. Now, we won't go all the way back to 1637. I think realistically, a lot of people do plan on investing for anywhere from 30 to 50 plus years. So even if we go back towards the 70s, okay, we can see a stock market crash in the UK. Black Monday, I'm sure you're all aware of Black Monday, 1987 in the US. Friday, the mini 13th crash, October 13th, 1989, okay, the early 90s recession, July 1990, the dot-com bubble in 2000, again, something you're all going to be aware of, the bear market of 2007 to 2009, the financial crisis of 2007 to 2008, okay, the European sovereign debt crisis, the 2010 flash crash, the August 2011 stock market fall, the 2015 to 2016 stock market sell-off. You get the picture. If you get afraid every time there is any sort of a bear market, long-term investing is not for you. There will be many stages in your investing career where your portfolio is going to go down 20+%, and that is just a fact of life. If you want to have all of your money in the market for a very long time, you will, in the short term, lose money an awful lot of times. It's the belief that ultimately we will make money in the long term. So am I selling any stocks right now because of what's going on, because of the fact I'm starting to see some red days? No, not whatsoever. The thought did cross my mind, especially in the likes of Delta and Southwest. I was up over 45% in both of them, and now I am nowhere near that. I mean, my Delta went down 14% yesterday, but it's back up nearly 10% pre-market. I have thought about trimming my positions on certain stocks that I was up over 30% in. I've thought about completely selling off to try to get a better cost basis down the line, but ultimately, I realised that I am a long-term investor, and I'm just going to keep holding, and if the market goes down, I'm just going to keep buying more and more companies that I personally feel feel are of good value. I'm very happy to say that just because I see a red day in the market does not mean I feel the need to sell. I started investing literally right around here. Look, this is not a good time to start investing. I have already seen my portfolio down 25%. I wasn't trading for 2 months and I had seen my portfolio 25% in the red. That is a fantastic lesson to have gotten so early on, and that's why days like yesterday mean nothing to me. There is so little stress involved as a long-term investor, because ultimately, in the very long term, it would be very hard to lose money in the stock market. If you buy a company and don't touch it for 10 plus years, very rarely are you not going to make money, especially if you have a very diversified portfolio. Because I bought stocks here, I bought stocks here, I bought them 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 here. I bought stocks this week on Monday. I'm going to let you know exactly what I bought on the weekend. I pretty much bought stocks right here. Long story short, I'm just always buying stock, and then that is going to make you have some sort of an average price right around here. So guys, that is where I stand. I am not selling stocks, I am not trimming positions, I am buying stocks, and I will continue to do so regardless of whether the market goes up or goes down. That's just the way I work. That is my personal investment strategy, and I respect anybody with a plan. I know there'll be people saying that you should always take profits, especially on a company like Delta or American Airlines, whatever it is. I was up 45%, I didn't take any. Hindsight is 2020, you know. That may not have been the top for these airlines. People could have made the same point when I was up 10, 15, 20%. You have to be realistic in this, okay? You might time the market right once. You might do it twice. But the odds of you doing it over and over and over again are very, very low. This time I might have sold Delta at the right time. Next time I could sell them at exactly the wrong time. And the time after, even worse. You get me? But again, I'm not a financial advisor. I have the hoodie to prove it. Just always do your own research. Always form your own thoughts and opinions. That is what is really, really important in this game. And then you're not going to be afraid when you see a red day, because you have a plan. So guys, I hope that you did enjoy today's video. If you did, please smash it like. It would mean an awful lot to me. Subscribe if you're new around here. I will catch you for tomorrow's video. Have a great day. Peace.